Hey everybody, welcome to the weekly wrap-up video here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist. Now, what we're looking at is the markets coming into the close on this Friday. It is a triple witching Friday, which means the expiration of both futures options, index options, and stock options all at the same time. Massive swings going on in the last couple minutes. I'll show you some in just a minute. But suffice it to say, the markets continued their grind today that started again after the Federal Reserve this week cut interest rates by 25 basis points, even in spite of the 10-year yield going higher. And again, that is very interesting because, again, the Fed cut rates and the yields actually went higher on the long end of the curve. But nonetheless, the market's shaking it off. All green candles or all green lights mean go for this market. And investors are buying in hook, line, and sinker. All right, let's take a look at where the S&P is here. If we take a look in the final couple minutes, we're up about 0.5%. So certainly not a big move. But one thing of interest, it looks as of now as if we will confirm above this wedge pattern. Now, what does that mean? Well, when you zoom out, what that basically tells us is we're likely to head a little bit higher in the near term. First resistance I'll be watching is this next level right here. So again, we'll take away this one, and you can see that this one's important because, needless to say, we have a pivot high right here and right into July, and then into late July, into early August, and we're getting close. So this will be the next level to watch. Now, you might say, well, we're getting above and we're confirming, so why are we looking at the next level? Because markets work like stepping stones. So to the downside, when we break a level, what do we look for? We look for the next technical support as traders. And we see, okay, well, now it's coming to this next level. Can it break through this next level, or does it get rejected? And then vice versa on the downside. If it breaks support, okay, where's the next support? Does it break through that, or does it get a bounce? And that's what traders do. We're always looking at the next possible level that the markets could go to. All right, so going back to the charts again, we'll watch closely. This next level's just underneath 6,700. So we got that even number of 6,700 coming up. I do want to just point something out here, folks. Today, based on where we're trading, and think about this, guys, we now have 666 on the S&P 500, 6,667. So we have that 7 at the end. One little tidbit of information that I find fascinating is if you go back to 2009, and I talked about this today with my traders, the low on the S&P intraday was 666. Now, it doesn't necessarily mean anything, but it's just very interesting. So the low in 07, 08, and 09, essentially the low in 09 before we started this big move up, was 666. And today we've now achieved 666 for the first time on the S&P in subsequent numbers. And again, we'll see if it pushes to 667 on Monday or not, but very interesting to see that event. All right, back to the daily chart again. S&P is pulling back a tiny bit into the end of the day. But as I mentioned, it is triple witching, and triple witching creates some wild moves. And I want to show you this, guys. Look at the craziness of what's going on here. So this is APP, AppLovin. It's getting added to the S&P 500. But notice how literally about 5 minutes ago, 10 minutes ago, it was trading at $630. Then it just went to $653. That's a $23 move intraday in about 5 to 10 minutes. And these are the types of moves that you get, especially when a stock gets added to the S&P, because funds out there are having to buy and add it to the S&P, or essentially to their fund that tracks the S&P. Now, once that's done, usually these stocks will come crashing back in, but it is interesting to take note of that. Then look at Microsoft. Look at this on Microsoft, and there's the bell. The stock market is officially closed for the day, but look at this run. This is, remember, this is a $3 trillion market cap company. And in the last couple minutes of the day, essentially the last 15 minutes of the day, Microsoft gained $10 in per share, essentially. So again, that is a huge move, $10 up on Microsoft into the end of the day. Now, you can look at other names out there. You can see Apple didn't really do a whole lot. And by the way, you're also going to get quarter rebalancing, right? So rebalancing is part of this, where again, money will come out of certain stocks and rebalance into other stocks and all these different things. This is one of the kind of the crazy parts of the year, is the end of a quarter. And granted, we still have till next week, but what you'll notice is a lot of the rebalancing is taking place on the triple witching expiration Friday, which is today. All right, so just wanted to point that out. I want to flip back to the QQQ. The Qs, same thing. We closed just fractionally above, up about 0.7% on the Nasdaq 100 today. The big leaders today, again, we saw Microsoft really gaining substantial momentum. Amazon was flat. Nvidia was flat. Tesla had a good day, up 2%. But again, it was Apple leading the charge, up 3% on the day, with Microsoft coming up late in the day to propel the QQQ higher. Now, where is your next resistance, right? So what would be the next resistance point? And for me, I start looking at low pivots going back to August of last year, which was a major low. If we look at this, we can see that, interestingly enough, we have a little bit of a level here. And again, doesn't mean the market will stop here, but my job as a technician is to always monitor key levels and see what has three connectors. Now, you could connect any 2 points, right? Any 2 points on the QQQ, on the S&P, on Microsoft, on Nvidia. That's easy to do. The question is, do you have a third point? And that's what you're looking at here. You have your major pivot low from last August, which was that epic collapse, 10% in a matter of weeks on the stock market. And then obviously during the Liberation Day sell-off, we saw a big sell-off. And then we hit it right here, reject it, and now we're back into it. So coming in on Monday, now that the craziness of triple witching is over, I will be monitoring very, very closely what the QQQ does right at this level. By the way, what was the high today on the QQQ? 600.05. Major even number hit as well. Now, flipping over to the US dollar, the dollar continued to bounce today. Again, we talked about this earlier in the week on the My Trading game plan, and we can see again, classic upsloping trend line going back to 2008. And sure enough, we hit, and look at the bounce. Now, what's interesting is we actually put in a bottoming tail on the QQQ here, or excuse me, on the DXY. So on the DXY, we have a bottoming tail. And let's watch to see, does that signal now a reversal in the dollar? And what could cause that reversal, right? I mean, that's going to be the big question, is if the dollar starts to trade back up into this 100 to 101 resistance area, is that because fear is spiking and people are running into the dollar for safety? Or is there another factor there? And again, how do we know if a bottoming tail is negated? Any daily close below that bottoming tail, that will be your negation again. But notice again where the low was this week, right into that level. The 10-year yield did push up. It did not reconfirm back above this orange line as it closed lower than yesterday's high. So it leaves it open-ended to potentially confirming on Monday or falling back below. And believe it or not, you actually favor the downside. When something confirms to the downside, if it closes above, if it doesn't confirm back above, then you continue to monitor and basically say, all right, well, at this point, it still favors the downside because it never reconfirmed to the upside. All right, couple charts I'm watching here. We have Nvidia, which basically closed flat on the day. Next week, I'll be watching Nvidia to see if it breaks out above this descending trend line right here, or does it break down below this ascending trend line? All right, so upsloping trend line here, a breakdown would be around 172 or lower. Obviously, it needs to confirm, or does it break out and close above, let's say, 179 and confirm, in which case it would retest the 185 all-time high. We talked about Microsoft already. Looking at Microsoft, Microsoft was pretty muted all day until this late day surge, which again was options X related there, potentially some rebalancing going on as well. And then Amazon's one I'm really watching. Look at Amazon today. So number one, it was flat on the day. Didn't really do much. But look at how many times it's hit this trend line going back to the lows of April. Let's see next week. Does this break down? Does it break below this trend line, right? So again, we can connect these lows, notice to this exact low, through these lows, right through here. Does it break to the downside or not? Very, very intriguing to watch and see. Now, one of the big things, right? So we got to talk about the biggest elephant in the room. What is the Nikkei going to do on Sunday night into Monday. Now, most people, again, if you're tuning into CNBC, Bloomberg, you probably didn't even hear about this, but I talked about it this morning. The Nikkei was sharply lower intraday last night in the overnight. Their day, our night, obviously, here on the East Coast of the US. This fall coincided with a big move up in their yields. Now, their yields are borderline breaking out to the upside. You may get a crazy move in the yen carry trade. That's a possibility. Ultimately, this coincided with the overnight U.S. futures selling off. And remember, last August, so if we go back to August of last year, which we were just talking about here, this sell-off in the markets, in the U.S. markets, 10% drop here. In fact, I think on the Nasdaq, it was even bigger from here to here. Yeah, it was about 16% drop in a matter of a couple weeks on the Nasdaq. That coincided with a major issue with the yen versus the dollar trade, essentially the carry trade there, and what was going on in Japan. So a lot of people here in the US, they say, who cares about any other area, right? Well, believe it or not, the markets do care. And I said it this morning in my trading game plan, is that when you have what Japan has, which is about 236 times debt to GDP, and you are seeing yields going up, 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 because people don't want to lend them money because they never expect to get paid back, you are essentially looking at the future of the U.S. I mean, it's probably the U.S. 10 years out, but that, again, is the future, right? Where yields will go up regardless of what the Fed does. Remember, the Fed controls the short end. They don't control the long end. You know, basically 10, 20-year, 30-year. Nope, Fed has no control over that. They only control the short end. So this is going to be very interesting. Now, down the line, do I see the Fed maybe buying long-dated bonds to try to push yields down? Yes, because we've learned over the past 15 years since '09 that the Fed will do shady things to manipulate the markets and bring levels down. But again, when you look at the Fed buying our debt, it's basically like we're buying our debt, right? I mean, let's be fair. It's essentially, yes, it's not technically the same thing, but it essentially is. When you really delve into who's on the hook for that, do we want, these different factors? In any case, I digress. I don't want to get into too many crazy things here. Okay, so let's watch the Nikkei overnight. I'll be watching the Japanese 10-year yield as well. Flipping over to a couple other charts, Bitcoin, guys. So we're flipping over to the daily chart here. So the daily chart could not get above the key level that I gave you guys. And again, remember this line on Bitcoin, huge line, huge trend line going back to 2017, 2021 highs, 2024 highs, 2025 highs before it broke briefly above. And by the way, topping tail and second topping tail on the weekly chart. That's not good. Now, listen, if Bitcoin can close above, let's say 117,500 now going into next week, okay, then I think right away probably it shoots up to 126, 130, right? It gets a big breakout. But the fact that it was unable to, and it tested it yesterday, and the stock market made new all-time highs today, and Bitcoin couldn't even push through this resistance, that is very concerning from a technical analysis standpoint. That has to be monitored. Okay? So let's monitor that. So again, we'll see where Bitcoin goes. Also notice the ETH trade is now coming down. This is, again, these parallels I put in, but the ETH trade on the downside has support at 43.40. If it breaks that, there's a big air pocket potentially all the way down to 37.50 or so. And you can see ETH is down today as well. And by the way, I've said this in the past, but if you look at past cycles in 2021 and past, even before that in 2017, Bitcoin tops, and then usually 6 weeks later or so, the stock market tops. Now, we're kind of right in that zone, so let's monitor this. And again, a lot of people will say, oh, well, the markets just want to go higher. You're absolutely right. They do want to go higher. They're grinding up 0.25%, 0.5% per day, almost nonstop. But again, this is the same thing that happened in '07. This is the same thing that happened in 2021. For me, at least, I'm watching these other factors. I'm watching the Nikkei. I'm watching the dollar. I'm watching the 10-year yield here in the U.S. These are other breadcrumbs that, as a trader, I have to be ready to focus on. I have to be focused on that and be monitoring at all times, because when the rug gets pulled, it'll go fast. Remember, markets take the stairs up slow grind up, which is what we're seeing, they take the elevator down. That's the old adage on Wall Street. If you've been around for a few decades, I'm sure you've heard of that one as well. All right, couple other charts to go over here. Gold today did get a bounce. This morning we talked about this technical level of support. Gold had a very nice day. GDX, Newmont Mining surged on some upgrade action, different stuff like that. Gold again, remember we talked about this morning. As long as gold holds this zone, then you favor a move back to this yellow line. Now, the yellow line until broken above is resistance. We have to respect it. But as of now, that's the level to monitor. Absolutely. It's right around 37.25 currently. That'll be the level I watch next week. If we look at silver, let's take a look at silver today. Silver had a great pop. I continue to be bullish on silver. Silver should head up to 44, okay, right here. And if it can get through the 44 zone, then it has a shot at 48 to 50. Wow, that would be something else to see. Maybe a new all-time high on silver, considering gold has made new all-time highs for basically the last almost year at this point. Incredible stuff. Oil today. Let's look at oil. Oil continues to show some relative weakness here. It's just kind of limping along. It's not at support, which is at $60.65, and it's not at resistance, which is around $66.50. So again, it's kind of just stuck between here, but it really shows, if you're looking at relative strength in the economy, right? If you're gauging the economy, what commodities are you looking at? You're looking at copper and you're looking at oil. That tells you everything you need to know if you're a trader or investor or economist about the health of the market or the economy. And this is not good. This is not telling us that the economy and global economy is going to be robustly growing. It tells us, in fact, that you're likely going to experience a slowdown. And if we flip over to copper, copper is mired in a nasty bear flag. Hasn't broken the bear flag yet. If it does, it goes to 420. But you can see this slow consolidation zone after this nasty reversal. And that's not the chart of a growing economy either. So keep that on your radar. Lastly, natural gas. Let's take a look at this. Nat gas, again, closed below the trend line. Again, it confirmed above, so it's got to confirm back below. So a close below doesn't mean a whole lot. If anything, we just continue to monitor this in the near term into next week. There hasn't been a trade on natural gas for me for quite some time, frankly, just like oil. It's just a matter of being patient, waiting for the setup to arrive. All right. Other than that, again, markets, they closed relatively strong. If we go to the SPY, I want to show you guys this on the intraday. Ooh, this is interesting. So, by the way, early in the day, this is the intraday 10-minute spiders, S&P 500. So you can see we opened, we sold off a little early in the day. That's pretty normal. That's institutional money taking profits, selling in. Once the volume died out, look at this. The exact low right here of the day was at 11:30 a.m. Like, it's not a coincidence that they're specific times, because the algorithms are programmed at that point to shut off the selling pressure. They say, okay, well, retail doesn't have enough volume for us, so move back away and let retail bid the market up, and then we'll sell again come Monday morning, right? And that's what we saw. Rallied right back up, bullish consolidation, rally up. And then you did get an end-of-day 10-minute topping tail on the spiders. Because it's options X and triple witching, I'm not a huge focus. I'm not going to say, all right, this is a signal for next week. But it is just something that I want to remember on Monday, just in case. And again, normally with triple witching and kind of the shenanigans that get played, you don't want to make a mountain out of a molehill. But let's just keep that in mind going into next week. So when all is said and done, folks, next week will be interesting. I look at next week as being kind of a clear the board type off moment, meaning options X, triple witching is done. The games that institutions have played are done. Now we get back and focus on the data, on the charts. We see where things really resolve themselves. Does Microsoft, that bid up into end of day to hold? Does APP's bid up into end of day hold? Or was it just an options X shenanigan game by institutional money to maximize their profit into this trading day close of options X? All right. On that note, guys, of course, I'll be here all weekend long studying the charts, keeping things up to date. I will keep you guys posted. Anything new I come across, I'll do a video over the weekend. You guys have a great one. Thanks so much for tuning in. Take care.